Hello, friends. My name is Jayesh Mehta. Let's discuss the personal tax. How it's going to impact. Based on the new tax regime that is going to come into effect as of 1 April 2020. Based on the union budget announcement that happened recently. So we are going to go through a few examples to understand which regime is better applicable to you, whether it's a current or new tax regime, depending upon your situation. So first of all, before we go further into this, let's look into what's your current tax regime, which is still as the same. Individual age, it's based on individual age less than 60, between 60 and 80, and greater than 80. And as you can see here, there are 4 slabs in the current tax regime, whereas over here in the new tax, which is tax regime, which is optional, and there are 7 slabs. So if we keep our focus on the first category, which is the below age 60, there are 4 slabs, which is ranging from 0% to 30%, depending upon which tax bracket you are in. And here the tax brackets are slightly different, and that's where the potential saving is going to come from. And these are your IT rates ranging from 0 to 30%. So your focus should be mainly here, which is 5 lakh to 10 lakh. It's between 10 and 15%, whereas here it is 20%. So now let's look at the deductions and exemptions. The first and foremost thing is all of these deductions and exemptions that you see here, there are 19 in total. All of these are not applicable for the new tax regime, which means they are not eligible in new tax regime. So these deductions and exemptions are applicable only for the current tax regime, and none of those you can avail in new tax regime. So if you were to choose new tax regime, your deductions and exemptions will be 0. So now let's look at, despite that, we want to see how the new tax regime is going to help you save, do some tax saving there. So let's look at the various exemptions and deductions, which are quite common. One is the HRA, the standard deduction, and your section 80C, which includes various investments that you do, LIC, your national savings certificate, fixed deposit, post office, time deposit, etc. Then your medical insurance, which is under section 80D, and your interest on home loan property, which is basically section 24, and donation, which is section 80G. So these are most common. Highlighted them. Others are also applicable. They are nothing gone away as far as the current regime is concerned. They are all there, but I have just highlighted only the common ones. Now let's look at the example of the individual below age 60, and let's look at various components here: basic salary, HRA, and then various deductions. All these deductions and exemptions are marked in blue, and these are the tax rates. So in order to keep them in sync between the current and the new tax regime, I have actually I have done the proper math here to keep them. Like, for example, 20% slab I have expanded so that we can see side by side comparison. So the ones that is marked, what is current, is in gray, and the new regime is shown in green. Let's look at the example here with a tax situation for a salary of 5 lakh rupees. So you have a basic salary of 4.5 lakh, and your HRA is 50,000, and you are eligible for standard deduction, which is 50,000. And let's assume that your tax deduction of all of these sections put together has been rupees 75,000. It could be more, it could be less, but this is for the sake of example. I've taken 75,000, and your HRA, which will be exempted depending upon your situation, but I'm assuming that you live in metro, or it could be a non-metro, but you would still be able to get to the extent of 50,000 exemption. Of course, there are calculations that you need to take into consideration. The formula is given right here. I'm assuming a rent payment of 10,000 rupees. If it's less, then it will be accordingly. But let's go by that assumption of 10,000 rupees rent per month. And of course, you need to keep all the receipts and all the documents that you need to maintain if you are going by current regime. So your gross total income would be 3,25,000, and your tax liability will be 3,750, which will be fully removed because of the deduction that you get, the rebate under section 87A. So that is still continuing for both regimes. So let's say that if you don't want to go with this situation, with as far as 5 lakh salary is concerned, either way, whether you are going with current regime or new tax regime, your tax liability is going to be still zero, because the maximum tax applicable is 12,500, and the entire 12,500 is given back to you in the form of rebate, so your tax liability becomes zero. So the advantage of going with the new tax regime is, although you are not getting any of the deductions or exemptions, but you don't need to maintain any of the documents. So that's a better way to think why this new tax regime is applicable here, even though the tax liability is still the same, which is zero. Now, if I look at the next candidate here, where your salary is 12.5 lakh. Okay, if that's your situation, and I'm assuming that you of course you will have standard deduction and your taxed deductions, which are combination of all these exemptions and deductions that we talked about, is, let's say, it's 158,333, 1,58,333. If that is your situation and your tax income, the gross tax income after deduction, is 10,41,667, then your tax liability will be 130,000 rupees, 1,30,000, which is after adding 4% of cess as well. So however, if you adopt new tax regime, you will not be eligible for any of the deductions or exemptions, so everything is zero, and your tax liability will still be 1,30,000 rupees, which means you can see here they are both equal, right? So you can choose either, doesn't matter. However, let's look at the situation where your deductions, you are having more of the savings, and your situation is better in the sense that you have got more savings. Then the question is, which regime is right for you? So at that point you would see if it is greater than the break-even point, which was 1,58,333. Now you have total savings of 2 lakh rupees, including your medical insurance as well as the donations and all those things that we spoke about earlier. All of those deductions and exemptions put together, if it is 2 lakhs, then it's a no-brainer that you will go with the current regime. As you can see that there will be a tax saving of 13,000, and there is a recommendation that comes out straight, go with the current regime. Alright, now let's look at, on a flip side, let's look at if you didn't have a situation of 2 lakhs, but instead if it was 1 lakh, then 1 lakh, if it is 1 lakh, then let's look at what's my tax liability under current regime. That's 1,48,200 would be my tax liability for a salary of 12.5 lakh, and obviously that is a lot more than the current regime, which will only evaluate your tax at 1,30,000. So your saving is 18,200, and obviously the recommendation is go with the new regime. Now we can actually talk about various other examples that I have here: 15 lakh, 50 lakh, 1 crore, but that's not the point. The point here I'm trying to make is to show you what works better for you. So do let me know if you have any questions, in comment section, and I recommend you to subscribe my channel. I'll be coming out with more of such videos that was going to help you, and let's have those discussions, which will help you choose the right resume for you. Thank you so much, friends.